Welcome to the virtual roadshow series on Channelchek. Today we are featuring Great Lakes Dredge and Dock Company, NASDAQ GLDD. Research coverage of Great Lakes Dredge and Dock is provided by Noble Capital Markets. Noble is a FINRA licensed SEC registered broker-dealer. All Noble research is available on Channelchek. Following the formal presentation, Ho Fratt, the Noble Senior Analyst covering Great Lakes Dredge and Dock, will ask our presenters a selection of the questions received. The source of the questions will remain anonymous. And now, here is Lasse Petterson, CEO and President, and Mark Marinko, Senior Vice President and CFO of Great Lakes Dredge and Dock, to make the presentation. Lasse and Mark, take it away.
Okay, great. Thank you very much. This is Mark Marinko, our CFO at Great Lakes. Good morning. Welcome. Lasse is on the call as well. The plan for us is I'll walk through our presentation. It's similar to our investor presentation that's out on our website. And then afterwards, we'll take Q&A with Lasse and myself. So look forward to the next hour and letting you know more about Great Lakes Dredge and Dock. I'm looking at the screen. Moving forward, you can see our safe harbor message, as you'll see out there. But on the next slide, what we'll go through today is a little company overview, some investment highlights, some financial information, and there's a little appendix at the end that gives you a reconciliation of net income to adjusted EBITDA. First of all, the company overview as I move forward here. Here's a snapshot of Great Lakes Dredge and Dock. Most of this information is as of March 31, 2020. So Great Lakes has been around for 130 years. Interestingly enough, recently, earlier related to the pandemic, Great Lakes Dredge and Dock has been deemed, essential critical infrastructure. So we have continued to work during the COVID-19 pandemic. Great Lakes Dredge and Dock is the largest dredger in the United States, and we're really the only U.S. dredger with an international presence. We do many things, many different types of work in the dredging world, and I'll talk a little bit more about that, but our three main areas that we work are what we can call capital dredging, coastal protection, and coastal restoration. We additionally do port deepenings, shoreline protection, barrier islands, land reclamation. So there's many different types of work that we do in the dredging industry with our equipment. It's not just what generally people originally think of as you're just dredging a channel to make it deeper or to take the silt out of a channel. We do a lot of different types of work, which I'll get into in the next few pages. Really important to Great Lakes Dredge and Dock is safety. So we are an incident and injury-free company, an IAF company here. So safety is paramount to us, and it's really important, obviously, on our projects and with our clients. Some financial information on the right side of this, so it's on a trailing 12 months basis. You'll see we have $737 million of revenue, about $153 million of EBITDA. And our company backlog at the end of March 2020 was $475 million. Moving to the next slide, a little bit more overview of Great Lakes. So as I said, we are the largest provider of dredging services in the United States. Even more importantly, we are a Dredge Act and Jones Act company. And what that means is it is a protected market in the U.S. International competitors cannot come in. So this work has to be done by, because we're a Jones Act, it has to be performed by a U.S. ship and has a U.S. crew. We've been in the international market for a very long period of time now, since really the early 90s. We're the only ones in the U.S. U.S. dredging company that works internationally. Most importantly, and I'll talk more about this coming up, is we have a large, diverse fleet, and it's really in three different categories: hydraulic dredges, mechanical dredges, hopper dredges. And that's very important related to the different types of projects, because different types of dredges have competitive advantages on certain types of projects. So I said earlier, our core services, we do a number of different types of work, and again, I'll get a little bit more into that. Our clients are federal, state, local foreign governments, as well as domestic and foreign private companies. Our largest client, almost about 80% of our work, is the U.S. Army Corps of Engineers. That's here in the U.S., and the reason for that is the U.S. Army Corps of Engineers is responsible for all the navigable waterways in the U.S. And we have about 1,200 employees currently at Great Lakes Dredge and Dock. Let's talk about our different types of work and the market sizes here. Our market, how much it makes up of our revenue. So we really look at these 5 different areas. There's first of all capital revenue, which is about 42% of our revenue. These are port deepening projects. That's where we take the channel and make it deeper, and that's very important as we talk about as I will talk about the Panama Canal. That's been deepened, and when they get deeper, for the deeper draft ships, larger ships, the ports in the U.S. has to be deepened to take those ships in. We also do coastal restoration, land reclamation as category. It's our largest category, and this is the work that's the most complex to do and most difficult to do, and really important to have large, complex, technologically advanced equipment to do the work. Secondly, next to that is coastal protection, and you can see in the picture there, that's really where you recreate, rebuild beaches, and in that picture there, you can see where the beach is widened, and you can see the top left of that is that part of the beach has not been widened yet. So as erosion happens, hurricanes, those types of things wash the beaches out, we come back and replenish them. Down on the bottom left is maintenance revenue, and that's actually the easiest type of work, the most competitive work in our industry. What that does is, as a channel or a port, over time silt comes in, and we'll fill up that channel. All we do is we take that top level of silt off and put it back down to the depth that it was originally. We also have foreign revenue, which is historically about 7% of our revenue. Again, we're the only ones in the U.S. with really a foreign presence. Currently, we have a location out in Bahrain, and that's lately most of the work we've been doing is in the Middle East, but in the past we've worked in Australia, Brazil, Europe, but right now the work that we're doing is in the Middle East. And then on the bottom right is rivers and lakes. These are smaller dredges that work inland on rivers, large rivers and large lakes in the U.S. We won't dredge the local Gulf pond. It's got to be kind of a big lake, big river like the Mississippi. But those are smaller dredges that are actually dismountable and movable on trucks. But on the right-hand corner, you can see what we look at this pie chart about what's recurring revenue, meaning what continues to happen. So about 55% of our revenue is recurring, meaning that we have to go back, or someone in our industry has to go back and redo these coasts. It's driven by Mother Nature. So whether for example, Baltimore Harbor, the silt comes in every year, that gets dredged every year. Other ports may have to be done every 2 or 3 years. So anything that's driven kind of by Mother Nature, and we have to go back and do that work again every 1 to 2 to 3 years, we consider that recurring revenue. That's about a little more than half of our revenue. Moving to the next slide, I want to talk about our fleet, because this is really important in terms of why Great Lakes is has the largest market share in the U.S. and it's a really important competitive advantage. We look at it in 3 different types of dredges. Hopper dredges, which are dredges that essentially suck sand off. They have drag arms on the side of them. They go down to the bottom of the seabed, suck up sand off the bottom, put it in itself. It has essentially think of it like a barge inside of it, and then it sucks up that sand and either takes it to a designated area to be dumped, or you could take that same sand and pump it on a beach. The hopper dredge is the most versatile and could do the most type of work out of any of the types of dredges we have. Mechanical dredges, those are dredges that are either like a backhoe that would be on the front of the dredge, or a clamshell, which you can see in that picture is a clamshell that takes rock, clay, silt off the bottom, picks it up and puts it in a scow to be taken again off to a designated area. And on the right-hand side is what we call hydraulic dredges. You might also hear say they're cutter dredges. What cutter dredges do, they have a large arm on the front of it that goes down to the bottom of the seabed, and it has a rotating head on it with teeth, and that cuts through rock. So where we have to go somewhere, and like, for example, in a port deepening, you have to go make the port deeper and cut through the rock. That's the perfect type of work for that. The reason these are really important to understand is, for example, a hopper dredge could do maintenance on a port, suck sand off the bottom. It's the most cost efficient. A hydraulic dredge with the cutter can also do that work, but it's not as cost effective as a hopper dredge. So you want to make sure you have the right equipment for the right type of project to get the best return. So to have a large, diverse fleet is important. And across the board, Great Lakes has the most powerful or largest of all of these types of dredges here in the US. Let's go to the next section now and talk a little bit more about the market and investments and what's going on and why Great Lakes is a really interesting and market leader here. I'll go through these 5 different areas, so I won't read them now. I'll go through them one at a time. So first of all, we'll talk about us being the market leader and what the competition looks like. So in terms of number of dredges, you can see Great Lakes on the left-hand side has 22. The next 2 are kind of Weeks at 12 and Manson at 10. I call out Weeks and Manson because they're our most formidable competitors. They're the most that are national in the US. Where you move to the right side, those players are smaller and tend to be regional players. And as you can see, our 3-year domestic bid average market share is about 39%, where Weeks is about half of that and Manson is about half of that. Second part of the investment highlights here is what's going on in the market and what's driving our robust market at the current time. Just to give you some numbers, over the last couple of years, the market in the US in the dredging industry has been around $1.7, $1.8 billion. In the 5 years prior to that, it averaged about $1.2 billion. So what's driving this market growth of approximately 50% over the last couple of years is these items here. So as I mentioned, I touched on earlier, the Panama Canal was deepened. Because of that, the US ports had to be deepened. So almost every large port in the US has to be deepened to take these deeper draft ships. And over time, the ships keep getting larger and larger. And the ports have been continuing to go through this deepening cycle over the past 50, 75 years. But the Panama Canal was a big driver. Every large port on the Gulf and East Coast is essentially being deepened, and we're in that cycle right now. On the right-hand side, we've also seen there's this Gulf Coast restoration. The Restore Act, which is really related to the Deepwater Horizon spill. About $20 billion was put into that from penalties, was put into the Restore Act, and that money has to be used for coastal restoration in the Gulf. Not all of it's dredging, but a nice size of it is. We've had to build a couple of projects already from that Restore Act, related to the Restore Act, and those funds were barrier islands in the Gulf Coast. And what barrier islands do are miles offshore, you build up sand and you essentially build an island out. And what that island does is that as a hurricane comes through, it reduces the force of a hurricane. And down on the bottom is really what is I'll call our general normal fund that funds the Army Corps of Engineers. It's the WRDA Act and the Harbor Maintenance Trust Fund. And what the Harbor Maintenance Trust Fund is it's funds that port taxes are collected, put into the Harbor Maintenance Trust Fund. And those funds are supposed to be used for port maintenance, essentially dredging and some other items. But over time, only about 50% of those funds were used for port maintenance. They were siphoned off to other areas. But President Obama signed the WRDA Act, which requires over time for that number to get up to 100% of those funds to be used for port maintenance. We're in about that was supposed to happen by 2025 up to 100%. We're in the low 90s right now. So that's been growing over the last few years related to that WRDA Act. Next, I want to talk about our fleet because we've made a major commitment to renew and improve our fleet. If you know Great Lakes, you've heard over the last couple of years, we brought in the Ellis Island. It's the largest hopper dredge in the U.S., really a game-changing vessel for us. And this is one of the cases where bigger is better. The quick example to give you is, in many cases, we're at a project, the hopper dredge has to go to a designated area to pick up sand, might be 15 miles away from the project. And you go pick up sand, then you go dump it off. Or if we're doing a barrier island, for example, you dump at the barrier island, go back, and you do this cycle over and over. So if you have a 15,000 cubic yard hopper versus a 7,500 cubic yard hopper, you essentially make half the trips. So big is important here, and size and technology is all important in this vessel. For example, our second largest hopper dredge is the Liberty Island, which is about 7,500 cubic yards. Is what it carries. The next one is the Dredge 58. It's the largest and most powerful clamshell dredge in the U.S. We actually bought this from a competitor about a year ago. So that's very important to us because clamshell dredges actually have a competitive advantage in certain projects where you cannot use a hopper dredge, use a cutter dredge because of turbidity. And that's where you get a plume after you dig sand up, and you don't want that plume to be too much because it could, for example, in Florida, float and go on coral and kill the coral. So they require to use this type of dredge because it has low turbidity. So you have a really important competitive advantage there. Third one is we've taken the Ohio. That was a dredge we had in the Middle East and moved it back here to the US because the market's so good. But at the same time, we upgraded it. So it has the most powerful cutting power in the US, which is really important and effective as you cut through rock. And then recently on our last earnings call, and then subsequently we signed a contract. We're building a new mid-size shallow draft hopper dredge. And that'll be done in about 2.5 years. That dredge, what's important about a shallow draft dredge is it can get very close to shore. And when you fill it up with sand, you get close to shore, it's very close to where you can pump sand on the beach, or you have a very short pipeline to pump on the beach. As opposed to if you're far offshore, you'd have to use a long pipeline with boosters. So it has a competitive advantage there. So we expect these all these improvements to our fleet, whether it's new vessels or improved vessels, to improve our competitive position going forward, improve our market share and our operating margin. One of the other items that's really important, which is now complete, is we did do a restructuring program. We announced it back in 2017. We completed it in 19, or most of it was completed in 2018, a little more in 19, but we removed $40 million of costs from our P&L. It was in actually 3 different areas. It was in G&A, it was in overheads, it was in, which is actually above gross margin, and it was in, we retired a number of vessels that were either underperforming or underutilized. So as you can see, the assets rationalized there. We got rid of 100 different pieces of equipment. 8 large dredges were included in that, and the other pieces were what we call ancillary pieces of equipment, whether it's tugboats, other pieces of equipment that work with our dredges. And we did it on time and achieved the number. It was highly successful for us. And it's really, as we get to the financials, it's really one of the items that caused our big move in terms of better profitability. Last piece of the investment highlights, we have a very experienced management team. Lasse was appointed CEO. It's been 3 years already now, Lasse. So Lasse's been on board since May of 17. Dave Salmonelli, our Chief Operating Officer, has been with the company for 40 years. And you'll actually see there are many people that are in Dave's group and operations that have been with the company 30, 40 years. I joined the company about 6 years ago. Katie Lavoie has been with the company. She's our chief legal officer for a number of years. She's actually a 4th generation dredger. Some of her family goes back to the original start of actually Great Lakes. And Annette Sear it recently joined in, it's been a couple years now, in 2018, a very seasoned HR professional. Let's flip to the financials, just a couple more slides, and you can see these three different charts here. On the upper left is revenue. So you can see over the last few years, related to those market items I was talking about. So the Panama Canal and the port deepenings, the Harbor Maintenance Trust Fund, Restore Act, all those items have improved the market for Great Lakes and for the entire industry. And that's resulted in just record levels of revenue for the company. On the upper right-hand side, which I think is even more, we're more proud of, is the improvement in profitability. So if you go back to 17, which is our low point, where still the market hadn't really come back yet or really moved up to the levels it was before, and then we put in the restructuring plan, you can see there's 2 numbers on here. You can see our EBITDA. So we've gone from 57 back in 2017 to 153 million on a trailing 12 months at March 31. And our adjusted EBITDA margin has moved up to below 10%, up to 20.8% in the trailing 12 months of March. On the bottom left, the bottom center of the slide is what our capital expenditures. We are capital intensive company because of our fleet and our renewing of our fleet. If you go back to 15, 16, 17, you can see those increased numbers there, are higher numbers than the last 3 years, are really related to the Ellis Island and the building of the Ellis Island, which cost about $160 million to build. Over the last 3 years, we have a more normalized set of capital expenditure drivers. It is around 35 to 40 million a year that we invest in our fleet. And most of that is to keep it in class. We're required under the Coast Guard to keep our vessels in class, but we also do upgrades and things like that, where we might improve pump power, improve engines, improve technology, improve electronics, those types of things on the vessels. But generally it's about 35, 40 million under that kind of regular maintenance market. The next slide here is our backlog. So over time, you can see back to 2015, our average is about 591 million of backlog. We're at this peak of 707 in 2018. And now over the last couple of years, you can see that's down right now. That's actually fairly normal when you look at a March number. It's because of the timing of bids. So we obviously get the backlog, we burn it off, we work it. When you get to March, the first half of the year, meaning the first quarter, March, second quarter, are generally low bid periods for us. And the third and fourth quarters are higher. The third quarter is usually the highest of the year because the U.S. Army Corps of Engineers has a fiscal year end of September. So a lot of bids come out. So we're very busy with bidding right now. And then you'll see that backlog come up. So it's fairly normal to see it be lower at a March date. But a very strong backlog from where we've been in the past. And that's really related to those market drivers I talked about before. I won't go through the appendix, so it's just the adjusted net income to adjusted EBITDA if you want to see that math. But that's it for the presentation. So I believe at this point I may have to turn it back and we'll go to Poe, I think, and we'll go to some Q&A.
Great. Thank you very much, Mark. And thank you, Lasse, for joining us. My name is Poe Fratt. I'm the senior analyst at Noble Capital Markets who covers Great Lakes Dredge and Dock. And here are some questions that we've received from the audience and a couple of my own. First off, Mark and Lasse, would you talk about competition? You talked about how the market has grown over the last 5 years. Can you talk about the competitive environment and what you're seeing on the way of new capacity coming into the market from others?
Yeah, the competitive market is good. We have new competitors coming in with new equipment into the market, but fortunately, the dredging market in the U.S. has been very strong the last 2 years, mostly, as Mark was saying, on the back of the deepening of the Panama Canal, which then resulted in the ports on the East Coast needed to be dredged down to 50, 53 feet. And also oil and product exports out on the Gulf of Mexico has also driven the market in a good direction. We see this good market continuing as we now see legislation in front of Congress, where we see the appropriations for the Corps of Engineers continuing at the same level as we've seen the last couple of years. We have also been active in the international market. Unfortunately, that market has been very slow after the completion of the deepening of the Suez Canal back in 2014 and 15. So we have repatriated some of our dredges. It's something we can do with our cutter dredges, and increase our capacity in the US. So it's a good competitive market, and also a very strong dredging market for I would say, the next 4 to 5 years. And that's a pretty good visibility for a contractor to have.
That's great. If I could just follow up on that, when you look at the market, you said currently about 1.8 billion. Do you think that's going to be at a plateau for the next couple of years, or is there upside to that number? And could you update us on the LNG projects that you see coming down the pike that might have been delayed just a bit?
Yeah, I'll start on that. Maybe Mark can fill in. But yes, we do believe that this size of a dredging market around $1.8 to $2 billion is a high number, and we see that number coming through for next year. There are additional funds coming into the market from the commercial clients in the oil and gas markets. As you have seen, there's been new petrochemical plants built in Texas for exports of products, and now lately for crude. We also see new LNG terminals being commissioned. But as we saw, both we had COVID starting to happen, and we also had the oil price war between the Saudis and Russia, which put a damper on the oil and gas markets. And when we look at the LNG projects that we have tendered, we see some of them going through on schedule with a slight delay, and we see others being postponed a year or so. In general, the ones that we see going forward are projects where it is additional capacity being added to existing LNG plants, whilst the ones that are greenfield developments have taken a year delay. And that revenue could be in addition to what we see coming from the Corps of Engineers funding.
Okay, if we could look just a little bit beyond that too, Lasse, you've in the past talked about the offshore wind market development. Can you give us a timeline and then sort of discuss the competition in that market, and then also what you think your competitive advantage would be in that market?
Yeah, in general, that market, I believe it will be a very interesting and strong market in offshore wind on the east coast of the US. We see new developments being planned, and the number keeps moving, and you could be looking at somewhere in the 15 gigawatts of new capacity being put in over the next 10 years. And when you follow the different states on the East Coast, they are continuously updating these numbers. This has been an industry that has developed, particularly in Europe, over the last 20 years, heavily subsidized, and our competition, international competition, has been able to build a fleet and vessels that are efficient and modern on the base of that very strong European market. Now this market is developing here in the US, and we as Great Lakes would like to participate in that market, and we think that there's components of the development phase of the projects that we can participate in, particularly the site preparation, scour protection. If there is a need for solid ballasting of these units, we can participate with some of our existing equipment. As the market starts to increase, we will need to then invest into new equipment to be able to follow that increased demand. As you probably know as well, there has been some delay in these environmental assessment studies that have been developed. So we do see the construction phase of these first projects being delayed slightly. We have seen Dominion just recently install their turbines for their, let's say, test program outside Virginia. And on the back of that, they are looking at a much larger program starting. Construction start somewhere in 2023 and onwards is what we believe the market will be.
I think the last time we talked, you mentioned that Dominion was looking at a purpose-built piece of equipment for the offshore wind market. Any developments there, or can you give us an idea of sort of what they're building, how much that would cost, as far as what you've heard or what your market intelligence tells you?
Yes, the vessel that Dominion was planning to engineer and potentially build as a Jones Act vessel was announced, almost 2 months ago. And they would like to see a US flagged unit being out there to participate both in the construction phase, but also for the maintenance phase of these the wind farms going forward. As you see, the blades needed to be renewed, turbines are getting larger, and crane capacity and particularly lift height capacity needs to be increased to access these new larger turbines. I think Dominion was announcing in the range of $500 million for constructing such a vessel here in the US. When we look at the market, that is not the part of the market that we would necessarily participate in. We are targeting the work that is going on under the underwater and on the ground or on the sea floor. And we are looking at potentially the rock installation and scour protection market, where we need to have Jones Act compliant equipment for developing these fields. And that's particularly the part of the market that we will be targeting.
And if we could look at your fleet again, Lasse and Mark, when you look at the growth over the last couple of years, the Ellis Island, you highlighted the Ellis Island, the clamshell 58, also the upgrade of the Ohio. Are there other opportunities? And then you're building a shallow draft, a mid-size hopper. Are there any opportunities within the existing fleet to upgrade capacity and enhance it? And then also, when you look at the hopper barge coming on in early 2023, do you think that will replace existing equipment, or do you think that will expand the fleet?
Yeah, I'll start out with that, and Mark, you can fill in. Yes, we have been continuously upgrading the fleet. As we went through the rationalization program, what we did was to get rid of equipment that was old and almost obsolete. And we could then use our capital to invest in the most productive parts of the fleet. And we upgraded with the digitalization of our systems on board. We upgraded the capacity and our let's say engines on and pumps on the vessels. It is a good investment in the fleet to upgrade the productivity of the fleet as we go forward. And what we now see is artificial intelligence coming into the systems on board, where the operator can almost just monitor what the dredge is doing, and it can dredge by itself. Clearly, you need to have someone to watch what is happening on the dredge at any time. Mark, maybe you would like to comment on the capacity side for the hopper dredge.
Yep. So yeah, on top of adding the Ellis Island is obviously we added, because of that size of it, we added 70% of capacity just because it's so large. And then the shallow draft dredge, that's a 6,500 cubic yards. When you think of our smallest hopper dredges, the Dodge Island and the Padre Island, they're about 3,500 cubic yards. So even that will increase capacity to our hopper fleet, which, as I said earlier, is our most versatile piece of equipment. It can do many different types of the projects that we work. But to add to that, it's not just the pump power that we've added. You know, we've upgraded. We talked about the Ohio. We're upgrading the Illinois right now. It's other ancillary piece of equipment we've also added. So additional scows, things like that. So a lot of this $40 million or $35 million, depending upon the year that you see, does add capacity and better performance to our fleet on top of just keeping our vessels in class. So we've made sure we've invested a lot of money to continue to renew and refresh the fleet.
Great. And Mark, could you highlight the timing of the CapEx for the new build, the first one? Yep,
sure. So the front end of it, we just at the signing of contract, it's a couple $1 million. That's normal. Our first payments, I'll call them more material, in the $5 million to $7 million range, will start next year. And then it's spread fairly evenly every few months in terms of milestones that they hit, whether it's cutting steel or putting this piece in, getting the hull ready, whatever that preparation is. So it's fairly equal, over the next, 30 months, with a little bit of retainage at the end that you pay upon delivery. So you'll see it be fairly smooth. So if it's a $97 million number, you'll see that kind of think of it in the 50 and 50 range over the 2-year period.
With a little bit in 2023, then mainly in 2021 and 2022, Mark? Sorry.
Correct.
Okay. And then when you look at your balance sheet's improved, you've been generating a lot of free cash flow. Have you thought about initiating a regular dividend or initiating the stock buyback program? The stock, we're all a little bit frustrated because the stock has not performed as well as we would have hoped, given the improvement in the market and how solid your execution's been.
Yeah, sure. So let me take one step back before I answer that. So we were very clear starting a couple years ago about, as we improve the profitability and free cash flow of the company, we wanted to take a couple of steps first. First was we wanted to de-lever the company, which we have effectively done. The balance sheet's in very good shape. We don't have anything drawn on revolver, and at the end of March we had about $200 million of cash on the balance sheet. After that, we said we want to refresh the fleet or continue to refresh the fleet, and we've done that with the upgrades we talked about, and now the small hopper dredge, and we'll continue to do that over time. But those were the first two we wanted to hit, and we've effectively done that. Now, as we look forward, we look at the cash in maybe 3 different categories or a couple of different categories. We want to invest that with the best return for our shareholders. So you can do one of, I'll call it 3 things. You can either, one, de-lever some more in terms of our senior notes, and we are continuing to watch the market for our senior notes. When COVID happened, the market really dried up there. It's improved a lot, but it's still not where we want it to be yet. So we looked at that. The second piece that we look at is M&A opportunities, and we continue to look at those. And then the third piece we look at, I put a dividend and share buyback in the same category. We are actively looking at all three of those categories. And COVID did slow things down for everybody. When it first came out, we didn't know how it would impact our business, how long it would last. So we really, step one was conserve cash. We don't know where this is going to go. And in fact, you saw many companies go draw on their revolver even if they didn't need it. We really didn't need to do that. But I want to be clear, and as we start to come out of this, we were deemed essential. We continued to work on our projects. Now we're re-looking at what are those opportunities to start to utilize that cash to bring that return to shareholders. So we're looking at all of those. I want to be really clear. Any of those opportunities, just to drive that return back.
Earlier, you talked about, how the annual timing or quarterly timing of bidding activities, the slow first quarter, slow second quarter, and then really active in the third and fourth quarters, mostly in the third quarter, it seems like. Can you update us on any large pending, proposals that you're working on, or, maybe quantify the size of some of the projects from a revenue standpoint? And then also, if you would talk about your backlog trends also, they seem to follow your awards, and, in a normal environment, would it be reasonable to expect the backlog to expand from where it is currently?
Yeah, I'll start out with the projects, and then Mark can follow up with the backlog development. Yes, that is true. The first 2 quarters of the year is normally slow on the bidding, and then it's very hectic for the third quarter going into fourth quarter. We are currently active on the deepening of the Charleston harbor, and we have a $325 million contract on that in that harbor. And there are new phases of Charleston coming out here in third and fourth quarter. It's been delayed slightly. So we are expecting contract 4 to bid in Charleston here in third quarter. And there's also a new phase of the Jacksonville deepening. We have been doing the first 2 phases of the Jacksonville deepening project, and the contract C, as it's called, is now coming out to bid in third quarter. Corpus Christi, there are still 2 contracts left on that deepening project, the third and the fourth contracts, and that will bid. It's announced to bid in third quarter, maybe fourth quarter of 2020, and then into 21. Mobile Ship Channel is also being bid. We are looking at new phases of Port of Virginia coming out in 2021, and so on it goes with the deepening projects. Typically, these projects takes 3 to 4 years to complete, and it's divided into several phases. And we are active on the large ones today. Maybe Mark, you comment on the backlog development?
Yeah, sure. So, you saw publicly we announced $51 million of wins in the last week or so. Publicly, we haven't put out a press release yet. There's a couple of, one we were awarded, one's low bid pending award, 2 projects for about a total of $25 million. So you can see those out on the Army Corps site, Ponte Verde and Delaware River. But to add on a little bit more to what Lasse is saying, I mean, to add some numbers to these, Jacksonville that'll bid in August is, $200 million, very large project. Port of Mobile that Lasse mentioned, that's a very large project. 200 to 400 million is the range. It'll be in a number of phases, but phase 1 will happen here in the third quarter. We still have the Spanish Ridge. That's a state of Louisiana march restoration, 100 million, in the range of 100 million. So there's a lot of really nice projects continuing to come up. And there's multiple of them coming up in 21, 22, 23. And we talk a lot about Houston. That's a really big one. That won't be this year, it'll be next year in 2022, but that's could be more than $500 million.
Great, that's really helpful. Thank you so much. And then if we could just circle back to the new build program or the new build, can you talk about sort of what return expectations you have on that, whether you're talking about a cash on cash or, return on invested capital? It's sort of, what are your return expectations on that piece of equipment?
Yeah, can I take that, Mark?
Sure. So we talked about it on the earnings call. I'll reiterate it a little bit. So when we do a new vessel build, we look at it in two ways. We look at it, one is is it fully incremental, meaning will it add, all new revenue, new market share to the project. And we do believe in this market that this new shallow draft will be incremental for us. And when you look at it, we do look at it on an IRR basis, and it's in the low 20%. But we also do a secondary analysis where would it cannibalize some of the fleet? And in the example for this one is, since it's a shallow draft dredge, it kind of competes in the same market as our Dodge Island and Padre Island, which are 40-year vessels, 41, 42 years old now, but they do perform very well still. But if that market was slower, we look at it as it would replace the Dodge and the Padre. And what would that return be? And that return from an IR perspective is in the low teens. So we always do that analysis, the first one being incremental, the second one we call kind of a champion challenger. Can it beat what's there today? And the other vessels then are essentially retired out of the market.
Okay, thank you so much. And then I think you've been pretty clear about it, but can you talk about the downtime or the dry docking activity that you've seen in the second quarter and looking into the third quarter, and maybe compare it to last year, and then also compare it to what you expect for 2021?
Yeah, we have that data, all right, Mark?
Yep. So this quarter, second quarter, as we talked a lot about on the earnings call, is our busiest dry dock quarter of the year. And just so you know, this year, from a dry dock perspective, is a little bit less than last year. When this year, but this year we did do the Ellis Island. So I think we had 7 dredges in dry dock last year. We had 6 this year, but I kind of call it 6.5 because Ellis Island's large. So the Ellis Island was in dry dock in the second quarter. It actually comes out of dry dock in, I think it's July 25th. So it did bleed in a little bit into the third quarter. So we still have vessels in dry dock in the third quarter, including the Illinois. But again, it won't be to the degree that we had in the second quarter. So you'll see, just overall for the year, fewer dry docks than last year, but the second quarter will be a little bit more than last year. And really driven mostly because of the Ellis Island and the size of the Ellis. So, and as you look at next year, it's kind of go in 3-year cycles, kind of high, medium, and then a little bit lower. But next year will be probably similar to this year, maybe a little bit lower.
And then I think I want to thank you for your time, and this presentation I think has pretty much covered all the bases. The one last question that I had coming in was, it sort of relates to the market and what we talked about before as far as potential upside. But, I'll ask it from the standpoint of, when you look at climate change, do you think that represents potential upside to the market size right now? Or do you think that's, pretty well known or incorporated in what your expectations are?
Well, I see that definitely as something that will, with climate change and rise in sea levels, we have seen more severe storms coming into the coast over the last couple of years, and the investments into infrastructure on the coastline to make the coastline resilient, but also population has increased in the states that do have a coastline, and people like to live close to the ocean. And I see increased need for infrastructure investment in order to protect that infrastructure.
Well, I think that's about all the time we have for today. I want to thank Lasse Petterson and Mark Marinko for helping us get a better understanding of Great Lakes Dredge and Dock story and their investment outlook. If you would like to get more research or see the research I've written on Great Lakes Dredge and Dock, go to channelchek.com and type in GLDD in the search box in the top left corner, which should say check the channels section. Thank you for attending. Thank you, Mark and Lasse, for your time today. And please watch out for more virtual roadshows coming soon on Channelchek. Thank you so much.
Thank
Thanks
you.
both. Thank everyone. Appreciate it. Thank you. Bye.